Hello, traders. This is Michael coming to you from GammaEdge on Friday, June 6th, with our pre-market morning strategy and briefing session. As always, here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. Currently looking at our market trend model, which is based on the tick index, which is a quick takeaway of buying versus selling in the overall market. And you can research that at your favorite investing website. Getting annotated to this, our bolded white CT is our instantaneous cumulative tick. Obviously, that is telling us if more buyers or sellers are present in the overall market. And yesterday in the afternoon, obviously with the news related events, we did see some weakness come into the overall cumulative tick. And we saw it crossing below these short-term moving averages. These moving averages give us a trend and direction. And obviously starting the day slightly weak, being under these moving averages. Excluding the morning news and price action that we'll discuss in a few minutes. Longer look back period, this is our colored ribbon. The red above cyan with positive slopes and moving to the upside is indicating that longer term market participants are positioning in the overall market for a bullish stance, more buying versus selling. Up here, our breadth indicator, new highs versus new lows. The green obviously rising, indicating more stocks are being bought and sold. And then our filtered cumulative tick, plus 1,000, minus 1,000, larger institutional or market player orders, was moving to the downside in the afternoon. So obviously indicating some larger institutional orders were going through and market participants. Moving on to the SPXA. This is our cruise ship. These are longer term, larger expiries. We were still call dominated in the full complex and looking at a bullish structure. We do see positive net deltas across the whole complex here. So any pullback in the overall market, at least concerning for the SPXA, which are institutional or larger holders, would be an opportunity to get involved within the overall structure and market. Moving on to the SPXP, these are shorter term expiries as denoted by the daily or weekly here. We did move to a put dominated condition at the end of the day yesterday, coming into pre-market today. You'll notice that the 6,000 level obviously is a significant level overhead. We almost reached that level yesterday and then started getting the pullback. And then obviously the news events caused a little bit more deeper pullback within the overall market. We do know the transitions here are a little bit wider. So again, this is slightly uncertain, a little bit of uncertainty coming into the overall structure with the all expiries turned on, and then 5,000 to the downside. That's a key level that we've denoted, obviously, over the past few weeks. That has been an important price level to watch, also in a round number. So for us heading into the day, put dominated, so a slightly weak structure on the all expiries. Denoting 6,000 the upside is extremely critical and important, and then 5,900 to the downside. If we do see any pullback to that area, we would look for some supportive type action. Below 5,900, we'd be a little bit more cautious for a little bit more weakness to creep in to the overall market. Moving on to the SPX P-GEX ratio. We discussed this yesterday, so you can review our pre-market prep video yesterday. That was our 5 minutes. We were seeing a slight weakness within the overall GEX ratio. This is a put-call ratio with a time component added, which is gamma, and we were indicating that we were moving to the downside on the GEX ratio. This obviously was telling us that short-dated call gamma was leaving the overall complex, and that short-dated put gamma could be increasing. And we're right at that one level. If you get your magnifying glass out, we just peaked below it. So anyway, with the overall pullback in the market, we did see that GEX ratio continue to drop. So we'll watch this to see if we recover that one level, indicating that buyers are trying to take back control and short-dated call gamma or call speculation is going into the overall complex. Moving on to the SPXP delta balance. Again, we spoke about this yesterday. We were seeing slight weakness within the overall structure with the out-of-the-money call speculation. This is the green line, the right-hand plane above spot price. And we were denoting our delta balance was starting to drop slightly yesterday also. And then we got the pullback within the overall market. So we'll continue to monitor this day over day. If you're bullish, you want to see this turn back to the upside, indicating that out of the money call speculation is coming back into the overall complex and call speculators are taking back control. Projected here, we are seeing a little bit more weakness into early week next week. So we'll continue to monitor this and let us know with the direction that the market may be moving with the options complex and structure. Heading on to 0 DTE, we are put dominated heading into the day this morning as of the time that we pulled this data. Again, we'll look at the gap up that is occurring obviously on the news. Transitions are very narrow, DEX and GEX. That gives us unambiguous if-thens for today for your trading plan. If you're above the transitions, we should be looking slightly more bullish, even though we are put dominated. It may be difficult for spot price to move up towards that 6,000 level. It looks like we were roughly at 59.80, 85 at the time I started this video. So again, in the money puts overhead could be a headwind to us. We'll have to continue to watch that. But obviously that 6,000 level is a key area overhead that we need to get above. And then if we get above 6,000, we'd look for a move into this area, 60.15 and 60.30. To the downside, if we're below transition, we'd obviously anticipate some more weakness via down towards the levels of the 5,900, 59.05 level down here, and then supportive area around 59.25. Monitoring the drunken sailor range will be extremely important. This could be an overall choppy range, as you've noticed by our gradient levels here at 59.75 and 5900, as well as 59.25. So we'll have to watch our intraday vol-m command to get an idea of directionality via market participants, if they are looking for out of the money call speculation or out of the money put speculation, or we have a overall locked horns, what we call in the money calls below us and in the money puts above us, which makes price appreciation difficult. So key areas for today: transition to the, and then to the downside 59.25, 5900, to the upside 59.75, and then target there of 6,000. Above 6,000 we would be bullish, possibly up towards 60.15 or 60.30. Just make sure we're respecting that how we're heading into the day with the overall positioning is put dominated at the time that we pulled this. SPXP net stat command, this is our highest sensitivity. Obviously, I've noted that 59.25 is a key area, 59.50 as well as the transitions on the downside. We'll look for those to be supportive on any pullback. And to the upside, pretty well defined, that 6,000 on the upper strike is an area where we could see some pausing. And if we see the volume command with positive centroids to the upside, we'll most likely see price appreciation hopefully move through that 6,000 level. So that's it for me today. Everybody have a great Friday. Make sure you're reviewing all of our videos that we post, pre-market prep, post-market prep. Sign up for our newsletter. We send out every weekend with key areas of option structure, as well as trading and other areas that we discuss in our education platform. Thanks everybody, and have a great weekend.